Welcome back to this week's market update. Today is Friday, August 25th, 2023. We had a very eventful week, so let's jump right into it. Like I was just saying, it was a bit of a busy week with lots of real estate data coming in, along with initial claims, durable goods, an update from the BRIC Nations, as well as a speech on Friday from Fed Chair Jerome Powell. As of close on Thursday, August 24th, the NASDAQ Composite fell 0.25%, the S&P 500 fell 0.5%, and the Dow Jones Industrial Average fell just over 1% on the week. Jumping right in here, we had existing home sales data as well as new home sales data for the month of July. And as higher rates continue to suppress residential housing supply, with consumers staying in their homes to avoid having to repurchase homes at higher prices and higher rates, existing home sales has seen quite a bit of a decline from a year ago. So here you can see July, we had just over 4 million homes sold. This was down 2% from June and down over 16% from July of 2022. So quite a bit of a slowdown in volume from a year ago. We did see the median sales price up just almost 2% to $406,700 in this data, and inventory sitting for about 3.3 months. So we find this interesting environment quite unique, as higher rates typically bring lower prices, but this is completely opposite, as higher rates have brought higher prices with the supply being so tight. So we'll jump right into the new home sales data, and you'll see kind of the difference in between existing and new homes. Quite contrary to existing home sales, new homes are the primary supply entering the housing market right now and tell a very different story than existing home sales. So this week we saw new homes sold in the month of July up over 30% in volume to 714,000, while on the other hand we saw the median sales price down almost 9% to 437,000. So don't get me wrong, this is still quite a hot market, but the supply and demand imbalance is quite different than the existing home sales market, with prices going down and supply going up, while on the other hand, existing homes prices have still continued going up while the volume has gone down. So very different scenarios here in between existing home sales and new home sales, but we will continue to monitor closely. Also this week, as we do every week, we got the initial claims data for the week ending August 19th. Came in below expectations at just 230,000 claims, so quite low there compared to, where we were above 250 earlier this year, and also just quite low and stable overall. If you look at the trend, it has ticked up slightly, but still quite a strong labor market, especially with the July unemployment rate at just 3.5%, and all the other data points kind of showing some stability in the labor markets as well. So, where is this recession? Maybe it's on the horizon, but it's not quite close, and we're seeing that in the jobs data. Also this week, we got the durable goods orders for the month of July, where we saw the greatest month-over-month drop in the last year or so, down about 5% from the prior month in June here, where we had a big increase. So obviously this is quite noisy data, and we saw the largest categories pulling the data down was non-defense aircraft down over 40% month over month, non-defense capital goods down 15% month over month, and defense aircraft down about 11% month over month. So quite noisy data there, but this is a big swing compared to the swings that we've seen over the last 12 months here. So no cause for concern. However, we will continue to monitor durable goods and the manufacturing industry closely for our portfolios. One bit of unexpected news this week in the markets was that the BRIC Nations at a summit in South Africa decided to invite/admit 6 new nations. So here you can see the current nations are Brazil, Russia, India, China, and South Africa, which you can see in the blue chart down here in the blue. While the new nations, including Egypt, Iran, the UAE, Saudi Arabia, Ethiopia, as well as Argentina, were the invited nations. So this is really interesting, as they have not invited a new country into their group since South Africa joined the BRICS in 2010. And really this is just an informal/semi-formal alliance of the countries that they talk. And allegedly, there's some sort of currency possibly that they might try to start on their own, but all of this is very speculative and things we just want to keep on the horizon in case anything changes. We'll continue to monitor the geopolitical landscape constantly for any updates with this, but right now it's just something to note interesting in the geopolitical spectrum. One last piece of market news this week. Friday morning, Fed Chair Jerome Powell spoke at the annual economic symposium in Jackson Hole, Wyoming, where he came across much more bearish than economists had expected. The speech was no celebration of inflation coming down over the last year, rather more of a warning that the Fed's battle to continue fighting inflation is still much of a battle. So just for some context here, this is where markets were prior to the speech last year at the August 2022 economic symposium, and how his bearishness at that symposium brought markets to those October lows of 2022. So quite a bearish statement here, and that led to markets slipping in September, October last year. Here's where we are today, and the sentiment was bearish, probably not quite as bearish as it was last year, but it'll be interesting to see how markets look at this information. In his economic outlook, Powell said getting inflation sustainably back to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions. So economic growth, we haven't had a ton of data coming in on that just because it's less frequent. However, the labor market conditions remain quite tight, and some softening in that would be interesting to see. So right now, looking ahead, a rate hike is definitely on the table, at least 1 or 2 more rate hikes by the end of the year, maybe early 2024. And at the September meeting, the probability is currently about 20%, and a rate hike probability at the November meeting or earlier is about a 50% probability. We look forward to seeing how the Fed continues to react in this environment and monitoring it closely. Thank you so much for tuning in, and we look forward to seeing you next week.